Welcome everybody on Facebook. So today we're going to be talking about how to get online small business loans. What we're ultimately going to be doing is just taking a whole look at some of the biggest and baddest lenders that are out there online. We're going to be decoding them, what they do, how they do it, etc. So you'll know the best options that work for you. Look, here's the biggest problem we find is that when you go on to a lender's website, let's look at OnDeck. They're one of the biggest online lenders that's out there. If you go to their website, it doesn't really tell you what they do, and it doesn't really tell you what it takes to qualify. So what we're going to do today is we're going to decode some of these biggest lenders that are out there today. We're going to talk about what programs they offer, the rates and terms that they offer, what they do, but most importantly, their qualification. So you're going to leave here and know some lenders that may work for you right now, whether it's a line of credit, loan that you can get. You're even going to get an idea of the rates and terms you're able to get, things that you're not able to get on their website. We went through and not only went through their website to get a lot of the information, but we also went through and even contacted them, got their information, their term sheets, the stuff that customers, front-facing customers don't typically see. We gathered all that data today to put together an entire whiteboard of the most popular online lenders that are out there, what they do, how they do it, the rates and terms they charge, but most importantly, who can qualify and who can't. So you're going to leave this live stream today having a pretty good idea of the financing you can get approved for. You're even going to know something we've never talked about before, ever on live streams, the actual lenders that will give you the financing, so you'll have a good idea of who to go through to actually get approved. So hopefully I have my comments back, because last week I didn't have my comments back. Okay, so how to get online small business loans. And there's a lot of these type of lenders. So what we're talking about here typically is working capital loans. Now, working capital just simply means you can use it for a bunch of different purposes that you may need. It doesn't have to be for set purposes such as real estate. Okay, a lot of these are available with bad credit. A lot of these are available for startups. So we're going to talk about options if you're a startup. We're going to talk about options if you have bad credit. So again, you want to basically figure out kind of what amount of money you're looking for first. How much money do you really need for your business? The next thing you want to do is we got to figure out the financing type. And as we're going to talk about today, there's a lot of different types of financing that we're going to be able to actually go through. Okay, so invoices. Do you have invoices? Are you looking to do factoring? Are you line of credit, term loan, merchant cash advances, etc.? We're going to talk about all these different kind of financing that's available, because you first need to decide how much money you're looking for, and the second you need to qualify, figure out what type of financing you're actually going to qualify for. So, that being said, there's some sources out there that will give you side-by-side comparisons of this information. NerdWallet is one. Nav is another. Credit Karma. These guys actually give you comparisons, sometimes side by side, of some of these type of loan programs that are available out there, so you can actually get a side by side comparison. And NerdWallet and Nav especially, really fond of these because they give you an idea of what one lender will do paired against another. Okay, so that being said, we also have a lot of partners that we recommend as well, and we'll actually tell you we're partnered with a lot of them. We have over 1,000 lenders that we work with today. These are some of the most popular ones that are out there. And again, we are going to talk a little bit more about the actual ones that are available, some of the ones that we're partnered with. This gives us the ability to know a little bit more about them. So, a lot of things we're going to be covering today. I'm going to be here for a little bit, just so you know. Yeah, it's up to you. Just letting you know. My wife just impromptu showed up in my office. You going to say hi? Say hi, honey. So I was just telling her that I'm probably going to be on the stream for a little bit. Okay, so yeah, I'll probably be, 20 minutes, 30 minutes. So let's dive in. Balboa Capital, first one we're going to talk about today. So loans up to about $250,000. Balboa goes up to about $250,000. They offer loan terms of about 3 to 24 months. And Kevin just showed up. Hey, Kevin, welcome. Thanks for coming in. 3 to 24 months. So this is shorter term financing. They're going to want you to have a 1-year time in business and $300,000 in annual revenue to be able to get approved, okay? And this is actually some of the things we didn't talk about. Considerations with these programs, which program is best, really comes down to what's called TIB, time in business. What's your FICO score? Do you providing a personal guarantee? What kind of revenue do you have? Do you have collateral? These are some of the considerations, the variables here that you're going to see with some of these loans we're going to talk about. So Balboa, 1 year time in business, $300,000 a year in revenue. You know right now, if you're not in business 1 year, $300,000, they're not going to actually work. They're going to ask you for your FICO score, but it doesn't need to be good to get approved. Okay, so they're going to give you something, even business cash advances with $500,000 to $250,000. Okay, they're also, you can get up to $250,000 with a little bit longer term through another program they offer as well. Now, with both of these, you need to be in business 1 year. One of their programs, you only need $10,000 a month in revenue. One, you need about $300,000, which is about $25,000 a month. Okay, they really do a couple different kind of financing. Debt refinancing, so they could take multiple loans and refinance them. They also do merchant cash advances. Now, if you're not familiar with merchant cash advances, here's how these things work. Merchant cash advances are the most popular type of business financing that's out there. Daryl, hey, thanks for coming in. Merchant cash advances are the most popular kind of financing that's out there today. And of the merchant cash advances, they're shorter term loans, usually no longer than 24 months. They're higher rates typically, but they'll allow for people that even have more challenged credits. This is a lot of what Balboa does. So the question is, do you have 1 year in business? Do you have $10,000 a month in revenue or $300,000 a month in revenue? That opens up a couple different programs. If you are a startup and you don't have these kind of revenues, 10 grand a month or 1 year business, Balboa is not the best place for you. So now you know. Shannon, thanks for coming in. Terry, thanks for coming in. Daryl, hey, what's going on? So Bluevine. Bluevine's one of my favorite new lenders that's out there, and there's a lot more on them than some of the other lenders we're going to look at because they offer multiple different programs. So they offer invoice factoring or invoice financing, and they also offer lines of credit. Now, they specialize in the new, most up-and-coming kind of lending that's out there, where we're taking artificial intelligence and incorporating it into lending. So what they're doing is they're basically tapping into your accounting software to make decisions for invoice factoring, and they're tapping into your bank accounts electronically to make decisions for lines of credits. So you can usually get financing about the same day, but if you've got invoice factoring, so what is invoice factoring? Invoice factoring is if people owe you money. If other businesses owe you money and pay you over time, that's what invoice factoring actually is. But the invoices have to come from another business or the government. It's called B2B. Business to business or business to government, meaning the government or the business has to be the customer for you to qualify for account receivable financing. Now, they don't deal with medical receivables. Some AR companies specialize in this. They don't. And there's no requirement or minimum requirement of the amount of receivables you need to have to qualify. Now, you got to have about $10,000 a month in revenue to qualify, and each of the invoices they'll accept have to have a $500 face value or not. If you have some invoices that are less than this, they just won't finance that, and they will finance the ones that are $500 or more. Okay, so they're going to offer you, they'll help approve you for receivables if the person's not taking more than 13 weeks to pay you back. So they can't be financing it for over 2.5 months, but less than that, they will help you. And again, there's no reserves. This is a big deal. A lot of account receivable companies have minimums, reserves or minimums of what you must meet to get approved. They don't, which is nice. Now, they'll give you up to 90% financing against your actual invoice. So let's say you have an invoice for $100,000, right? If you have an invoice for $100,000, it takes them 2 months to pay it. What Bluevine will do is Bluevine will give you 90% of that. So that's 90 grand the next day, and then the other 10 grand minus their fee gets paid when the actual company pays their invoice. So they're the highest I've ever seen. Almost all of the companies that do this are only going up to 80%. They'll go up to 90%, which is fantastic. Now, they can either send you the money in 1 to 2 days ACH, which makes sense. If you need it faster, you can pay $15 and they'll even wire it same day. But, you got to be careful here, because if your customers don't pay, then they're going to come after you for the fees. So something to keep in mind. And you only need a 530 credit score to qualify for invoice factoring. Guys, look, to be honest with you, there's a lot of people that do invoice factoring that have no credit score requirements. But so if you're lower than 530, there are other options, but they are a 530. Now, the second program they have, I love, and you need to pay attention if you like lines of credit. It's a true revolving line of credit up to $150,000, and you can get approved in 24 hours and fund 24 hours after for 48 hours. And what you have to have is $10,000 a month in revenue. A FICO score actually of 620 is what they're looking for. Guys, pay attention. This is very important. This is one of the lowest FICO score line of credits I've ever seen. Most of the time with line of credits, the rule is you need tax returns and you also need to have good credit, 680 FICOs or higher. But with Bluevine, they'll actually get you, and this is wrong, it's actually a 620 FICO score, not a 600, and only $10,000 a month in revenue. What they do is they plug into your bank account software or your bank account electronically. If you manage your bank account responsibly, you don't overdraw your account, you don't have non-sufficient funds, then what they'll do is they'll actually come in and they'll actually be able to give you an approval just because you manage your bank account responsibly and your FICO is above 620. So they offer credit lines of 5 up to 150,000. They also have what they call flex credit lines that go up to 100 grand, and the rates are pretty low, 4.8%. Now the way this kind of financing works is the rate is based on how many weeks you have the money outstanding. So if you only have the money outstanding for 1 week or 2 weeks, you may only pay 0.5% or 1%. But if you have it outstanding for up to a year, which is what you can, then the rate is definitely going to be higher. So if we look at this, Balboa is based on revenue, higher rates, and they're going to manually look at your bank accounts to approve you. Bluevine offers 2 programs. Do other people owe you money? Do other businesses or the government owe you money in slow pay? Great option here. One of the best I've seen with receivable financing and an amazing line of credit. Up to 150 grand as long as you have bank account, responsible bank account management, and a 620 FICO. Love Bluevine. New up-and-comer to the lending space. Really doing great job. Bond Street. Now they offer term loans. We like these. Term loans are longer term loans. So unlike Balboa that only goes up to about 24 months, you can get years here with term loans. They'll do 10,000 up to $1 million in 1 to 3 year terms. So you can see here with Balboa, we're only looking at usually about 6 to 18 months, maybe 24 months. But we can see here with Bond Street that they'll go 3 years, which is a much longer term. And you can get approved and they'll give you an offer in about 3 days. How do I sign up with Bluevine? Go to Bluevine Direct. Okay, now again, guys, keep in mind that we can help you with all these. If you want to talk more about getting approved, you can give us a ring. We work with every lender we're going to talk about today. We can even get you better pricing because we place so many deals with them and it costs you no extra money at all. We help you through the process for free. So you got a couple options here. You can go to creditsuite.com/get funding and fill out a quick pre-qual. We'll call and tell you all the money you can get. You can also give us a call and we'll talk to you more and help you through the process. You can go to them direct, but why not work with us? We help you at no cost and you even get a volume discount. Or you can go to them direct, whatever you prefer to do. So Bond Street, okay, they're going to do a soft credit pull using your social. You need to have a 640 at least to get approved. They're going to want 2 years time in business. $200,000 a year in revenue. So what they're looking for here is longer time in business and longer revenue. They're going to pay a 3 to 5% origination fee you should know about. Rates are pretty low though, as low as 8% depending on risk. So the question becomes here, where are you? If you only have 10 grand a month in revenue, well, this is a good option and this is a good option. You may even want to get a line of credit and a loan. That's what we help our clients do. We help our clients get loans at places like Balboa. Then we back it up with a line of credit from a place like Bluevine. We get them multiple different programs, something to consider. Bond Street, you definitely want to go with a term loan all day long if you can over a cash advance, but harder requirements here. 640 FICO, 2 years time in business, $200,000 a month revenue. Term loans are not easy to qualify for. These are what SBA offer. And when you look at these, they require better credit. Usually it's 680 or higher, so this is lower. Longer time in business and more revenue to get approved. But if you have it, you want to go with a term loan at a place like Bond Street versus a cash advance at a place like Balboa. Can Capital, they offer both term loans and MCAs, merchant cash advances. So the term loans have daily fixed payments and automatic withdrawals, much the same as merchant cash advances have. You can get about $25 grand to $150,000 per business location you have, and get about 6 to 18 month financing. So Can Capital, Balboa, same thing, right? These are shorter term loans using your revenue to qualify. Now, you don't need personal collateral, You don't need personal collateral with Balboa as well, okay? So something to keep in mind. Now you can again get up to $150,000. There's no maturity date. There's usually about a $400 fee. So again, if you have better credit and longer time in business, a term loan through a place like Bond Street is what you want. If your credit's not that great and you don't have revenue, maybe at 10 grand a month or more, then Can Capital, Balboa are going to be better options for you. Fundation, they work with a lot of kind of loans, which is why we're spending so much different time, space here on our whiteboard just for them. Let's look. They offer term loans. They also offer line of credit. Okay, their term loans usually fund pretty quick in about a day. About underwriting process and funding takes about a week. 20 to 500,000. So much higher amounts here of term loans than what we saw even available with some other options. Now, Bond Street still goes much higher, okay, but again, up to 500,000, where Bond Street goes up to $1 million. So 1 to 4 years terms, so this is longer term than what we've seen here. Bond Street goes to 3 years, Fundation goes up to 4 years. Okay, so again, a longer term. They don't need collateral. They are going to ask for a personal guarantee, as a lot of loans do, and they will file what's called a UCC filing, telling other people you have a loan. Okay, they're going to want you to be in business 1 year, have 3 employees or more, so this isn't going to work if you're a solopreneur, for example, and you've got to have $100,000 a year in revenue and pretty good personal credit. If your personal credit's not good and you want a loan, then you maybe want to consider Bond Street, because they'll give you an approval even with average credit, so something to consider. Okay, rates vary based on risk, as they always do. 8% or higher, similar theme to what we're seeing here. They're going to charge you a 5% origination fee. That's pretty high. Something to at least keep in mind, but they deduct it from your loan proceeds. So you have to take 5% right off the top as their fee, and then you're paying interest on top of that, so something to consider. Now, they also offer lines of credit of $20,000 to $100,000 as well, and they offer monthly payments versus the actual regular deductions, which we've talked about earlier. Okay, now, again, they're going to finance these over 18 months, no collateral. They're going to want you to be in business 1 year, 3 employees. So very similar. Their lines of credit here and their term loans have very similar requirements. 1 year time in business, 3 employees to actually get approved. They're going to charge you a $500 closing fee, a 2% draw fee, the first one that you actually get. And again, interest rates are about 8 to 30%. So let's recap and see where we are. Balboa deals with merchant cash advances for the most part, okay? They're going to want you to have a year in business. They're going to want you to have at least $10,000 a month to qualify for their bare minimum program. Fast, easy money just looking at your bank statements. Bluevine. This is if you have invoices, other businesses or the government that owe you money, they can give you up to 90% financing using those invoices as collateral. Okay, great way. And don't forget, they got an amazing line of credit. Love these guys. If you have a 620 FICO and $10,000 a month in revenue, you can qualify for a line of credit up to $150,000 with Bluevine. So love that option. Bond Street, now we're talking about term loans. Longer term loans, a little bit longer, up to 3 years, loans up to $1 million. You got to have about a 640 FICO, 2 years in business, and $200,000 in revenue, though. So a little bit harder to qualify. Then we dove in and we talked about Can Capital. Similar to Balboa, Can Capital's dealing with merchant cash advances mostly. They also deal with some term loans. You can get up to $150,000 with them. You usually get up to 18-month terms, so still shorter term financing, but a good option to go with as well. Fundation, again, we're back to term loans. We're back to cash advances as well, but a little bit more. They want you to be in business for at least a year and have 3 employees, and they can get you lines of credit up to $100,000, and they can get you loans up to that much as well. So again, comes down, the difference between these really have to do with how many employees you have, your time in business, and again, some of them, as we looked at, have revenue requirements based on the loan program as well. Fundbox, I love you, Fundbox. You're my favorite. One of my favorite funding programs. Fundbox is phenomenal. Okay, so they also, like Bluevine, offer 2 programs, same 2, invoice factoring and lines of credit. Now again, they're going to plug right into your bank account. With invoice factoring, you're going to get about 4.66% is the rate you're going to pay, okay? They also are going to, let me see if I can see anything else. Okay, so lines of credit up to about $30,000 within about an hour's worth of time. If you supply financials, they'll do up to $100,000. This is why I love you, Fundbox. I love you. I love you. There's no FICO. They don't pull your personal credit at all. They will not pull your personal credit. So I love Fundbox. A lot of our clients end up getting Fundbox or Bluevine. We get them loans through places like Balboa, Bond, Can, and then we back it up with a line of credit from Bluevine or Fundbox. So what I like about Fundbox, they will do invoice factoring as well. They plug into your accounting software as well, just like Bluevine does. But what I like about them is that they do a no FICO, no credit check line of credit up to $100,000. That's phenomenal. Guys, we have this. We have a $100,000 line of credit through Fundbox that didn't require a credit pull. They gave us $6,000 originally. We supplied our tax returns. They gave us 30. We've used that a little bit. We asked them for a bump. We supplied tax returns again, which is what financials mean. They bumped this to 100. A buddy of mine's in credit repair. He said, look, I'm in credit repair. I want a merchant cash advance. I know I'm high risk. Give me this. I said, no, your rate would be 30%. We got him approved for $30,000 at Fundbox instead. He only used the money for a week. His interest rate was 1% he paid on the money versus 30% he would have paid here. Love this. High-risk industries are accepted here. High-risk industries are accepted here. Great options to consider. Fundera, much similar to Fundation. These guys offer multiple different loan programs, which makes it really phenomenal. Again, I'm going to take a jump back. If this makes sense to you guys, feel free to give us a call. We can talk to you about any of this. We never charge you a dime to help you get financing. You can also get pre-approved at creditsuite.com/funding. These guys give us a kickback, a referral fee, which is how we get paid, but we get pricing discounts because we fund so many deals. For example, with Fundbox, we are their #1 affiliate in the entire nation. We send them more deals than anybody. They give us discounted pricing. We pass it on to you. So if we can help you with any of this, let us know. Fundera, term loans, lines of credit, and invoice factoring. Okay, so we're combining term loans that we see at places like Bond Street and Can. We're also combining, as we come to Fundera, lines of credit, which we saw like Bluevine and Fundbox, and invoice factoring like we saw at Fundbox and Bluevine as well. They do all three. Term loans require 1 year time in business, TIB, time in business, FICO of 600 or higher, and 90,000 in yearly revenue. This is one of the cheapest yearly revenue requirements we've seen. The rest want to see 100,000 or more. Okay, they also offer $25,000 to $500,000 term loans with 1 to 5 year terms. Okay, so another great option, 7% interest. That's cheaper. We've seen 7.99 in several places here, 8%. But this is one of the cheaper ones, a little bit on the low end if you're lower risk of 7% interest, okay? And again, you can also get 6 month to 5 year terms. Whoa, we haven't seen this yet. 5 years is the longest term loan we've seen. Bond Street was close with 3 years, the closest, but Fundera gives you term loans up to 5 years and lower interest rates. So definitely one to consider here. Now with their line of credit, again, they do 6 month to 5 year terms to pay back the line of credit. 10,000 to 1 million is what they'll actually lend. They only want 6 months time in business and 50,000 a year in annual revenue. So what we've seen here is so far, Fundera is one of the easier ones to qualify when it comes to time in business and revenue requirements. Fundbox doesn't have a credit pull though. So if you have credit issues, this is a better line of credit. If you want longer terms, have lower revenue, lower time in business, so far Fundera seems to be winning the race there, okay? So of course, higher rates for lower scores. You need to know, a lot of people think that merchant cash advances from places like Balboa or Can are expensive. It's not necessarily the case. It comes down to considerations. How long have you been in business? What's your FICO score? What industry are you in? How do you manage this revenue? How do you manage your bank account? If you manage your bank account well, your credit score is good, your time in business is good, guys, you can get a lot of this kind of money fairly cheap. But if you suck, like your time in business is horrible and your FICO is horrible, you can still get approved. You're just going to pay more money. It's the way that it is. So I've been on both sides. I've got money when my credit was in the crapper. My bank statements sucked years ago when I've owned prior businesses. And then I've come in and got really low rate financing as my credit gets better and as my credit's now good and I have longer time in business, better bank account management. So remember, money and rates and terms are based on risk. The fact that places like Balboa and Can give you these wild interest rate ranges like 8 to 25%, like Bond has, just means they deal with low risk, they deal with high risk. That's what that ultimately means. So again, you can get about 90% of the invoice funded with you with Fundera with account receivables. That's the highest we've ever seen outside of Bluevine. So great ways to go when you actually have account receivables. So lines of credit, term loan, invoice factoring, all options here with Fundera. Funding Circle, peer-to-peer business lending, $25,000 to $500,000. Okay, they give you an approval usually in about 24 hours, 6 months to 5-year loan terms. Again, Fundera and Funding Circle so far have the longest loan terms that we've seen, and they have rates of 5% or higher, the cheapest rate we've seen on term loans as well. And they're going to charge you a 1 to 7% origination fee, roll it into the deal, and then a 10% fee for missed payments. So Funding Circle, another term loan lender to actually consider. Cabbage, I like Cabbage. Cabbage makes lending pretty easy. They're a lender that we've been working with here recently that's been doing a lot of really good things. Lines of credit from 2 to 150 grand. About 50% of the people we survey only want 10 grand or less. You can qualify quick online, about 10 months. You can get a loan a minimum of 6 months. Okay, they want you to have 12 months of minimum volume of $10,000 for approval. You got to have that 1 year in time in business, $50,000 in annual revenue. Cabbage has the lowest revenue requirements we've seen of any of these sources yet at this point. They link right to your bank account and merchant account. This is called this AI that we're seeing, this artificial intelligence that Cabbage is using and Fundbox are using and Bluevine, where they're actually able to plug into your bank account to make automated decisions versus manual reviews. It's why you're getting approval so fast at Cabbage, Fundbox, and Bluevine. It's the AI they're using. It's the future of lending that these guys are using. Okay, so no fees to apply. 1.5 to 10% is what you'll pay if you pay it off early. So there is a prepayment penalty. LendCred, unsecured business credit lines, which means no collateral is required. Okay, $50,000 in minimum revenue is what you should have. They'll get you $25,000 to $100,000. Okay, it takes about 30 days or up to 30 days to actually get money. Okay, consumer credit. And again, what LendCred does is similar to many programs we use where they're using unsecured credit cards. It's called a credit card stacking program. We don't use LendCred. There's a couple of sources that we like a little bit better than LendCred, but they do offer 0% rates for 6 to 18 months. They can get you up to 100 grand. We work with some sources that can approve you up to 150 grand. They're actually credit cards, but a lot of them, like the sources we use, will let you take cash out of them. So we call them credit line hybrids because you can take cash out like you can a credit line, but you get 0% rates that you only get with a credit card. So it's like a combination between credit cards and credit lines. Guys, here's why today is important. LendCred works for startups. Cabbage, Funding Circle, Fundera, Fundbox, Bond Street, Can, Foundation, Balboa, Bluevine don't. So they don't tell you that on the website. You're not going to go to Bluevine and only know that it won't work for you unless if you're not a startup. And so a lot of these guys won't tell you this, which is why I'm telling you now that LendCred is the best option, only option we've talked about so far of all of these that will work for an actual startup. Lending Club. Love these guys too. They've been doing some really good term loans. $5,000 to $300,000, one of the higher amounts we've seen. 1 to 5 year loan terms. We've seen some other sources so far that do 5 years. Okay, fast quote. They'll give you in about 5 minutes, 48 hours for funding. You got to have $75,000 a year in revenue and 2 years in business. So they're really big on this. We don't send a lot of people to Lending Club because they want 2 years in business. A lot of our clients aren't in business for 2 years. They only need a FICO of 620, which is fantastic. That's one of the lowest credit score term loans we've seen, right? The next closest we saw was Bond Street, who actually I think will do a 640 that we looked at. So lowest of the ones we've seen here with Lending Club with the 620 FICO, it's the 2 years in business. That is the kicker in a 6% rate. So really good way to go if you don't want those high rate merchant cash advances and you want a term loan. Lendio deals with a lot of different loan programs. I actually just got off the call with Jim, their president over at Lendio. They offer a lot of different loans. Lines of credit, term loans, SBA loans, merchant cash advances, equipment financing. They offer a little bit of everything, just kind of like we offer a little bit of everything. Okay, well, they get 1 to 4 weeks. You can get interest rates of 8% or higher. Loan amounts of $5,000 to $2 million for term loans. $2 million because they deal with SBA as well. In about a day to 2 days, you can get your pre-approval. And they also offer short-term loans, which are merchant cash advances for 1 to 3 years. So Lendio, very similar to our model. They deal with most of these lenders. They deal with Fundbox and Fundera and Cabbage and all these. They have 76 lenders that they actually work with. So if you're looking for a line of credit, a term loan, a merchant cash advance, they can help you with all that kind of financing, again, similar to Weekend. Now, again, I'm going to go through a bunch more, but if this makes sense, don't forget, you can give us a ring at 877-600-2487 or go to creditsuite.com/get funding. We work with all these lenders and more. We have 1,000 total lenders we work with. So these are some of the highlights, but what our job is to look at your unique scenario, your considerations, your time in business, your FICO, your information, and then what happens is we take your information and we figure out which of these lenders is going to give you the most amount of money in the best term. Because let's be honest, you're busy running a business, and that's what we do is work with 1,000 lenders to figure out all these programs that we know so you don't have to know this and help you get it placed. So Daryl, I appreciate that, man. That's a cool hashtag. Okay, so on to OnDeck. OnDeck is the biggest merchant cash advance lender and the biggest online lender that there is. They're the one, they went public a few years back and have been killing it. Although they've been pulling back because they gave too much easy money to people and had all kinds of issues that they're fixing. They do short-term loans, but basically what they're dealing with is revenue lending. But they also have a line of credit. They're one of the only merchant cash advance lenders that has a line of credit available that you may like. So again, short-term loans, $5,000 to $250,000, typical. I've even seen them go higher. 3 to 24 month term. These are merchant cash advances, which means that the rates wildly vary based on risk. You've got to have $100,000 in yearly revenue and a FICO score of 500 to get approved. You've got to have 12 months in time in business. Now they also do have a loan line of credit that they'll give a 6-month term on that gives you $5 to $100,000. It's usually about $20,000 from what we've seen. So here's what these guys do. They offer merchant cash advances. But if you have better credit, they'll give you a line of credit as a second loan. So they give you the short-term loan, then they give you a line of credit behind it. So you get a loan and you get a line of credit. Everybody can't get this. What we've seen is they typically want to see better credit and tax returns to get the line of credit. So they're mostly the biggest and best out there for revenue lending loans, merchant cash advances. But if you have better credit, and you also have better time in business or better tax returns, which means you have to be in business a couple years, they'll also offer you a line of credit as a second option. PayPal, love you PayPal. PayPal and Square offer very similar programs here, and these are merchant cash advances. That's what they're doing. So what they're doing is they got a fixed fee of $500. There's no credit check, which is fantastic. It's all based on your PayPal history, your PayPal processing history, or it's based on your Square processing history if you're using Square. Both of their programs are very similar, so I'm going to throw Square into this as well. So again, what they're going to do is they're going to look at your PayPal history, and that's what they're going to actually lend it. Now, they're going to want to see that you have about 10 grand or more going through your PayPal account. Okay, they're going to offer you an approval in minutes. It's very, very, very simple. And what they got is they've got multiple different layers, levels. They even call this PayPal Premier, where you can get a loan of about $20,000 to $20 million based on your PayPal sales. Or you can come in and get one with $15,000 to $20 million. So if you're getting about $10,000 to $15,000 in revenue, then this is a great way to go. Okay, but again, they only do this in certain countries: U.S., Australia, U.K. So almost everybody watching here fits into that, and they're auto deducting it from your PayPal balance. So PayPal and Square are also similar to Balboa and Can Capital and On Deck. The difference is Balboa, Can Capital, On Deck, for example, their merchant cash advances look at what's going into your bank account, all the money that goes in. PayPal and Square only look at what you process through them. So if many of your transactions go through PayPal or Square, well, then they're obviously a choice. It's super easy money to get with these guys. But if most of your money goes through your bank account, then you want to consider an On Deck, a Balboa. You want to consider a Can Capital. You want to consider one of those options versus PayPal. But PayPal and Square are super easy to get. And since there's no credit pull, if you have a decent amount of money, 10 grand are going through PayPal or more, then consider getting an advance with PayPal or Square. It's super easy, cheap, fast money to get. I would go that route. And then if you have other money going through your bank account, get both. Get a PayPal working capital, get a revenue lending loan. Heck, even come in and get a Fundbox line of credit as well. So do you have money going through PayPal or Square? No? Consider it. We recommend a lot of our clients start processing money through PayPal or Square because they're easier to get approved for than other merchant accounts, and they make getting these kind of loans and advances so easy. But again, don't forget that it's all going to be based on what's going into your PayPal sales. That's what they're looking at here. Quarter Spot, love you. Quarter Spot, shorter term loans, merchant cash advances, 5 to 150 grand, 9 to 18 month terms. Again, the Quarter Spot, the On Deck, the Balboa, the Can Capital, all merchant cash advances have these shorter terms. Okay, they're all shorter terms versus your Bond Street, which will go a little bit longer, the 3 years, right? Or the Foundation, which can get you up to 5 years, or the Fundera, which can get you term loans up to 5 years. So they offer higher rates, okay, 23 to 52%. 100,000 in revenue is what you got to have at a 550 score. We've talked about some of these guys that have no credit check, some with a 500 score. They're about a little higher, a 550. 1 year in business is what they're going to look for, and 2,000 average bank account balance is what they're going to look for, and 2+ employees. So again, one of the benefits of working with a company like us is that we deal with all these lenders. So we can look at your own unique considerations, your time in business, your FICO, and we can tell you, look, we know Balboa is going to be a lot better than Can. Or we might say, look, we know Quarter Spot is going to approve you where Can and Balboa won't. It's just kind of one of the benefits of dealing with somebody that deals with all these loan programs versus just dealing with one. Rapid Advance, my last one, the finale. Standard Select Preferred Loans, loans of $5,000 to $1 million with 4 to 12 month terms. Again, shorter month terms. And here's the factor rates on those, 1.16, 1.13 per week outstanding. So this rate looks small, but it can add depending on how long you keep the money out. They're going to need you to have $10,000 a month in revenue, 120 grand. 580 score, 2 years in business. Harder qualifications than a lot of the other guys that we've looked at so far. Okay, 6 to 15 month terms, and we talked about 2 different products here because that's the standard select product. The select product goes up to 15 months. So 15 months is the highest term we've seen. If you want a little bit longer term with them, you need to have a better FICO score, and they prefer that you have 15 to 200,000. So we've got a couple programs. Their base program only goes up to a year, $1 million, and you only need 10 grand a month in revenue and a 580 FICO. The next score, you have to come in and do about $250,000 in business, a 620 FICO in 3 years' time in business. So it's a little bit more difficult to qualify for. And then you continue to go up, $250,000 basically in revenue, 660 FICO, and you're getting longer terms. So what you're seeing here with Rapid Advance is that if you want payments, which a lot of people care about the interest, but I'm going to tell you what matters more to your payment is this. Love PayPal. Kevin, I do too, and thank you. So what matters most is this. Don't get caught up on rate on these. Rate is based on your risk. What you want is the longest term. We give our clients options of, do you want a higher rate and a longer term or a lower rate and a shorter term? Everybody chooses the higher rate because the longer term means lower payments. So with what we're seeing with Rapid Advance is that based on credit score and based on revenue, it moves you between standard, select, and all their different programs. The more revenue you have and the higher your FICO is, then again, the more money they're going to give you, the longer term they're going to give you. Matthew, don't worry, this is live on Facebook, and so if you go back to the video, you'll see it in its entirety. So we just looked at 2, 4, 6, 7, 8, 9, 10, 11, 12, 13, 14. We just looked at 16 of the top online lenders that are out there, and we just did a complete comparison between all of them. I'm going to do a recap, but before I do, remember guys, we work with all these lenders. We have 1,000 total lenders. It costs you $0 to work with us to help you get a loan. So if you want to know what you qualify for, just give us a ring. We'll talk to you about these programs and more. If you don't like to talk to people right away, then go to creditsuite.com/get funding and we'll get you pre-approved and talk to you then about all the programs you can qualify for. So let's look at this. Remember guys, that time in business, your FICO score, your industry, your monthly revenue, all these things tie in to your risk and tie into which one of these is the best to choose. Balboa, we talked about, they're looking at merchant cash advances, revenue lending. They're going to have at least $10,000 a month, 1 year time in business to get approved. You can get money fairly quick, same week, up to 2-year term. Bluevine, love these guys. Bluevine, line of credit and invoice factoring. Do you have other businesses or the government that owe you money? If you do, well then they can finance as much as 90% of that money, and all you need is a 530 credit score. Or they have a great line of credit. If you have $10,000 a month in revenue and you manage your bank account responsibly, they'll give you up to 12 months to pay it back, and you need a 620 FICO score to get approved. Internet, don't worry. This will be live on Facebook, on our Facebook page, facebook.com/credit suite. Just go back and you can play the video on our page and watch it in its entirety. Bond Street, they offer term loans, shorter term loans up to 3 years. You got to be in business 2 years, and you have to have about $200,000 a month in revenue at a 640 to get them. Now, they all have different requirements, so that's a little bit more stringent than what we talked about. Can Capital, same kind of merchant cash advances Balboa offers. They also offer term loans, which are like Bond Street. Their term loans will actually give you money up to $150,000 in financing is what you can actually get approved for. So a great way to go with there. Okay, Foundation offers a lot of different programs, term loans and lines of credit. Okay, they offer up to 4-year terms. They want you to be in business 1 year and have at least 300 employees and $100,000 a year in revenue. 8 to 30% rates, and they're going to charge that origination fee. They also have a line of credit up to 100 grand, okay, that they can take, and they can amortize that over 18 months to keep your payments low on what you use the line of credit for if you've been in business 1 year or 3 employees. Funbox, love you, Funbox. They, like Bluevine, deal with invoice financing and a line of credit. They will come in and plug into your accounting software, just like Bluevine. This is AI, artificial intelligence. So they're plugging right in to determine if you've got other businesses that owe you money, then they can finance it at a rate under 4.8%. They also have lines of credit from 2 grand to 100 grand, but they have no credit pull. If you have revenue and consistent revenue and good bank account management, use Fundbox. We send so many people through them because there's no credit pull. There's no inquiry on your credit report, so it's worth it. Fundera, a lot of different programs. They deal with term loans. They deal with lines of credit. They deal with invoice factoring as well. Term loans are 1 year time in business, 500 or 600 FICO, 90,000 in revenue, cheaper than the other options we've talked about so far. Okay. Then they also come in and they do line of credit if you've been in business 6 months or more. Okay. Fundbox says 3 months is their time in business if you have the revenue, by the way. Okay. So great way to go here when it comes to getting term loans, lines of credit, and invoice financing. Funding Circle, again, they have loan terms up to 5 years. Okay, and they're dealing with loans up to about $500,000 term loan. So good option to consider there if you have better credit and you also have consistent revenue to be able to get approved. To get approved here, they're going to want to see at least $120,000 in revenue. Cabbage, fast, easy money online lending. They use AI, so it's about 10 months to actually come in and get approved. 1 year time in business, revenue of only $50,000, one of the lowest we've seen so far. LendCred, this is for startups. Unsecured credit card stacking is what they actually offer here. Unsecured credit card stacking, 0% rates for about 6 to 18 months. They'll go up to $100,000. If you want this program, let us know. We work with a couple sources that go up to $150,000 that we like more. Lending Club, loan terms up to 5 years, $300,000. Not as high as what we've seen here with with Bond Street, for example. Only $75,000 in yearly revenue. Rates 6%, so lower starting rates with a FICO score of 620. The problem here is they're going to need 2 years time in business and they're going to want to see tax returns. But if you have it, it's a great option to consider. Lendio, multiple programs, including lines of credit, term loans. They're going to want about a 620 FICO score and $10,000 a month in revenue as well. On Deck, straight merchant cash advance lender. Loan terms up to 24 months, $10,000 a month in revenue. But what's different about Fundbox than places like Can Capital is they actually offer a line of credit as an alternative or in addition to the loan they get you. They're the only one that I've seen that does that, so something unique about this. Lender Cured, awesome. Good people and good option. Really do work. Yeah, I like a lot of these ones we're talking about. PayPal, Square. If you process payments through PayPal or Square, use them for their working capital line of credit. A lot of details here based on which program you go with. But you need to have about $10,000 minimum going through your PayPal account to qualify. If so, they have a $500 flat fee. Simple, easy to get. The difference here is PayPal and Square will only take into account transactions that go through PayPal, your PayPal sales or Square sales, where On Deck will look at all money going into your bank account. So clear difference. Quarter Spot, another merchant cash advance lender, short terms. Up to $150,000, 18 months is what they'll go up to. You need a 550 FICO score. And Rapid Advance, again, deals with $10,000 a month in revenue, 580 FICO, more stringent FICO requirements, and they deal with revenue merchant cash advances as well. Does any of this make sense? If you want to talk more, give us a ring, 877-600-2487, or go to creditsuite.com/funding. Again, the reason I wanted to do this with you guys today is if you go to these guys' website, you'd have no idea. On Deck does not even say on their website that their time and business requirement or that they even use revenue to qualify you. So I wanted you to know the biggest lenders that are out there, are they looking at revenue? Are they looking at credit? Are they looking at time and business? Are they looking at all of it? Now you know. So you have some kind of basis if you want to go at this alone. But guys, keep in mind that this space is so convoluted and complicated. It's why we started our business. Because what we do is we work with all these lenders, 1,000 in total. We work with you to find out your unique qualifying requirements. We then tell you all the loan programs you can qualify for. And we oftentimes get you a line of credit and a loan and another kind of loan. So we continue to get you more funding, even multiple kinds of funding, because we work with so many different lenders. And it costs you $0 to work with us. You're still going to pay the lender's fees. You're still going to pay their interest rates, but you'll pay less than you would on your own, because On Deck, we fund millions of dollars with On Deck. So they give us what's called a volume discount, meaning they give us better pricing and we pass that on to you. Plus, we see many people that go to On Deck and get denied. They come through us and we get them approved because we do so many deals with them. We get consideration on deals where you're not going to normally get approved on your own. Think about it like that. Would you rather approve somebody's loan that's just applying by themselves or approve a loan that comes from a company that funded $5 million in business? So it costs you nothing to have us help you. So feel free to give us a call. Talk to us a little bit. Oh, that was flash. It was nice. Talk to us a little bit more. We can talk to you about all the programs you can qualify for. You can also go to creditsuite.com/get funding and be able to there too. So what you recommend for startup company, of the ones we talked about, LendCred is the best for startups. You got to have a good FICO score of 680 or higher or a guarantor that does. But if you're going to go with LendCred, give us a ring at 877-600-2487. We got a couple sources that might work better for you, where you can get higher amounts of money and get approved for a little bit quicker and take the cash out of the credit line. So hopefully that helps. Daryl, I appreciate that. I definitely don't have a shortage of energy, as you can see. So I'm going to go ahead and wrap this up. If you missed this or came in late, go to facebook.com/credit suite. You can watch this video in its entirety as we go through and decode the top online lenders so you know their qualification requirements, their rates and terms, and most importantly, you can get an idea of what kind of money you can get with them and whether or not you can actually meet their requirements to get approved. Thanks, everybody. I'll see you next Thursday at 11 o'clock Eastern. The weeks to come, we'll be talking about doing business as DBAs. We're going to be talking about other kind of financing options that work so you don't have to bootstrap your business. And we're going to revisit business credit, the benefits of business credit, and the steps to build business credit, which brings me to one final point. Go to creditsuite.com/Facebook to grab your free business credit guide. But Ty, why not a regular bank, Kevin says. Well, I didn't talk about regular banks, but there's a lot of them like Able Lending that offers SBA loans. SBA loans, Able Lending, those kind of programs are just harder to get approved for because what they require is good cash flow, good credit, and good collateral, all three. The options we talked about today either require good credit or revenue for the most part. If you have one of those, you can get approved. SBA loans need all three. If you have those, we deal with SBA loans as well. They just didn't make the list because there really are no top online SBA lenders because there's so much involved to underwrite and approve. Most of the guys nowadays that are online lenders are using AI for fast automated approvals, which means they can only look at one factor like credit or cash flow versus SBA, where there really is no fast online lenders because they've got to manually underwrite looking at your collateral, your cash flow, and your credit. So today we're just reviewing, Kevin, the online lenders, which are mostly revenue-based term loans or dealing with unsecured because they can make faster underwriting decisions, which is what a lot of these underwriters on online lenders are doing now using AI. Thank you all very much for tuning in. Facebook.com/Credit Suite to watch this video in its entirety. CreditSuite.com/Facebook, the opposite, to be able to grab a free guide on building business credit. I'll see you next week. We're in the weeks to come. We talk about more ways to get financing, steps to build business credit, and we dive into DBAs, which is a topic that we've never covered here on live streams. I'll see you next Thursday at 11 o'clock, everybody. Thanks. Have a great day.